Good morning, this is Steve Freed in Chicago with the morning grain comments. We had a pretty active overnight trade and pretty good volume. We started out higher after the USDA lowered U.S. crop ratings more than expected. And then we saw a wave of profit taking, especially in the beans, that brought prices down pretty sharply. Now prices are back to about unchanged, and we're still trading weather. For the next 2 weeks, it looks like about 50, maybe 60% of the Midwest favoring the north and the far east. We'll see some rain maybe as soon as tomorrow, and then again mid next week. South and west of that line, it'll be above normal temps and below normal precip. So we think that this overall pattern is not good enough to help the crop conditions, and we expect next week crops to continue to drop even more. NOAA says this is the biggest drought in U.S. history since 1956, expanding 55% of the country. The crop ratings in corn dropped 9%. In beans, it dropped 6%. We're still not as low as 1988, but the concern is that it could go down to those levels. We also saw one report out in Nebraska that farmers were banned from irrigating out of water surface areas. Other news overnight, Kazakhstan was talking about a drought hurting their crop conditions. India actually raised their crops in wheat and feed grains due to good weather. And in general, we're in this mode of trying to figure out how bad it is bad and where do prices need to go to ration demand. As of today, we think prices need to go higher to slow demand globally. These are my thoughts and not those of ADM Investor Services or ADM, and hope you have a safe and profitable trading day.